All right. Today's SPY was down 1.39%, and we did hit that critical resistance zone at the resistance trend line and the negatively sloping 20 daily moving average. And because we are looking at this as a daily downtrend, that is where we were looking for a rejection, and a rejection is exactly what we got today. So this was actually a very easy day to take short trades because we had such great well-defined risk reward, and that's exactly what we did on the Discord server. So keep in mind, the expectation from this bounce was to get to resistance and then likely trend down towards 430. However, do not assume we have to go to 430 because we did not break this support at 436. And if we bounce from 436 and break out and start heading towards 448, that is likely going to be our next lower high or the chance for the bulls to break out. So keep in mind, there were two paths I gave to the 430. One was that we went towards 448 and 450 and then went to 430. And then the other path was that we got rejected between 442 and 444. So it does look like SPY is trying to get to 430. It's just whether or not it's going to take the slower route there and go higher before it goes lower, or if we just got the rejection that's going to take us there right now. So do not get overly bullish. I don't see any reason to be overly bullish until we see a clear break of the downtrend and then start higher towards the gap fill at 455. And by then there's going to be plenty of time to get on the bull and ride it higher. But right now there's just too much risk to the downside. So be patient and watch the price action. And I shouldn't have to tell you that is a giant bearish engulfing candle. So do heed caution as we're coming into the support at 436. On the NASDAQ 100 triple Qs, we were down 2.14% today, and just like SPY, that is a very clear rejection from the resistance zone, which is that negatively sloping 20-period moving average and that resistance right around 371. And again, very bearish engulfing candle with price action below all of the moving averages, and we're back down below that level at 366. Below 366, we either need to do a higher low between 355 and 360, or we're coming back down towards 350 to 347. So as I continue to warn you, these are downtrends on the daily chart until we prove otherwise, and the proof that we're out of the downtrend is going to require a higher low bounce and go up towards that gap fill at 380, but wait for price action to confirm that, which is going to require a break back over 370 from this higher low condition, and then you'll know to go into the bullish scenario. Otherwise, you're expecting lower prices with the next price target lower at that support at 355 and 347. On the Dow Jones, we were down 1.1% today, and I've been talking about how relatively weak the Dow was because the bulls were having a lot of trouble getting a bounce even after a very oversold condition. And again, today we got rejected from critical resistance at 346, and we're down to the support at 341, just above the gap fill below 340. So in the Dow, it looks like we are going down there to fill that gap. And then once that gap fills, we'll likely find support and then start back higher towards 350. But you're going to need to see proof in the price action. So once that gap fills, look for support right around that rising 200 daily moving average and gap fill of support between 337 and 339. If we start to see the reversal and you start to see signs of buyers, then you could jump on that bull and ride it to higher prices. On the Russell 2000 IWM ETF, we were down 1.38% today, and we're still above the rising 200 daily moving average, but that is the critical risk level because if we break below it at 183, we're likely coming down towards the gap fill at 176. Upside resistance remains 188 to 190, and we need to break above that resistance zone to say that we're getting more bullish. On the ARKK ETF, we were down 3.5% today, breaking back down below 41, and we're sitting very close to the support at 40.5, and we're still above the 200 daily moving average at 39.5. 39.5 is the critical support because if we break below that, we're likely going towards the gap fill below 36, and the critical resistance remains a zone between 43 and 44.5. On the VIX, we were up 7.76% today as the VIX did bounce off the 50 EMA and maintain the bull trend by closing back above 17. The next bull breakout in the VIX is above 18, and that is likely going to tell us that fear is right back into this market and we could see high volume selling, but you need evidence in the VIX breaking above 18. Don't just assume it's going to happen. On Bitcoin, we're currently down 1.3%, and Bitcoin is still below all of the moving averages, which is obviously bearish because we're not getting bullish until we break back above 27,000, with the next downside support right here at 25,000. On Tesla stock, we were down 2.88% today, and we did get the bearish crossover of the 20-period moving average crossing below the 50 EMA, and price action is back below all of the moving averages. The critical support is all the way down there at 197 at the 200-period moving average, and we do have a gap to fill below 218, but that is going to require a break of this very critical support zone between 229 and 230. Below that support, look for the gap fill above 217, and if we break the support at 214, we're going down to 208 and then 197. On Apple stock, we were down 2.62% today, and Apple is starting to pivot below that negatively sloping 50 EMA and 20 period moving average of resistance right around 182. And we did fill the gap just above 177, so it is possible that Apple is getting rejected from 182 and trending lower to fill the gap at 167. Now, there is another scenario where Apple goes a little bit higher and pushes towards 185 and then comes down to fill 167. So do not get faked out if we start to pivot. That is not necessarily bullish in the longer term, even though it is going to be a decent trade in the short term. You're going to know that because you're going to see price action pivoting right around 177, and if we continue lower, then we're likely going straight down to fill the gap now. So jumping back over the S&P 500, as I've continued to warn you, this is a risk-off environment of daily downtrends, so we are still expecting lower highs and lower lows until price action proves otherwise, and even though that could be right around the corner, we need the price action to prove it. Don't do any guessing, because right now the daily downtrend is still intact, and when you have a daily downtrend, you always need to be cautious of falling knives, which is exactly what we got today. It's not always going to be this simple of getting right to the critical resistance and then getting the falling knife, so do keep that in mind. The easy trade is over with, and congratulations if you captured it, but it's going to get a little more choppy and a little more tricky from here, so make sure you know these critical levels and you're setting up all of your trade plans around your critical risk levels. If you never learn how to manage risk in trading, you're never going to be profitable, so figure it out now and make sure it's part of your trade plan. If you want to come crush this market, consider joining Bank Trade Alerts or the Stock Channel Discord server, and you can find out how to join either service by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.